Hi, and welcome to the Market Alert for Wednesday, the 10th of February 2020. This morning's Market Alert is going to be a lot shorter because I decided to upgrade my Mac Pro computer last night. I had to upgrade a new graphics card, and of course it's not gone to plan. Fortunately, it's all backed up, so this morning I will be recording on this 12-year-old PC, which works fine. And the only thing that will be missing is the recorded version of yesterday's market activity. But I still wanted to get something out. Been quite easy just to say there's nothing this morning, but that's not my style. And also it's important that we keep abreast of everything that's happening on a daily basis. So yesterday, the headline there, speculation is rampant again. Sam Zell warns there's no reality attached to this market. There hasn't been since 2009 when QE1 started, but it's interesting to see this. SEC's braces for market manipulation crackdown. Pull the other one. Under Obama is when the silver manipulation started, so there's no way it's going to end under Biden. And yesterday had a meeting with Jamie Dimon, the head of JP Morgan as well. So no doubt they were talking about the potential silver short and also the silver shortage of the physical metal and what can be done. Or unless, Plan B is coming into effect and they're actually going to take off the manipulation and allow silver to move to around $600 is where it would be adjusted for inflation from 1979. Sometimes they ring the bell at the top, why Bank of America expects a 5 to 10% quarter one market correction. Yeah, I would agree with this. It's not often I would agree with a bank, but certainly with this one, the market is way, way, way overvalued at the moment. And speaking of Jamie Dimon, Houston, we have a problem. 85% of silver in London already held by ETFs. So we're already starting to see this shortage take effect. Well, actually, this was happening before the physical sales went through the roof last week. So it's going to be interesting now. There's going to be pressure. It's going to be a slow squeeze on silver prices to move them to the upside. You can't do like you do with a stock and everybody just go long and force a hedge fund to buy. It doesn't work like that, as I've said before, so I'm not going to labour that point. Meanwhile, on the implied volatility, we can see that we're at 16.12. We increased slightly yesterday because the market was undecided. It was sideways, but still green at the moment. But of course, this can soon change as well. And then news today, let's just have a look and see what we've got here. We've got German CPI, that will be medium to high impact. And what else have we got? Yeah, there's that one. And certainly the USD CPI out at midday. That's showing a slight increase as well. Last time it was 0.4, but this time 0.3. It's been 0.1 for years. That's the core, 0.2. And then what else have we got? Powell speaking, but we'll be finished trading by then. He's out at 7 p.m. Okay, let's start off by having a look at the German DAX and the daily chart. In fact, what I'll do is just drag these up a bit, make them a bit bigger. And in the daily chart, we can see that yesterday the market moved lower and is closed below the 5-bar moving average, but managed to recover and move back towards the upside there. So what I would be inclined to do here is just to go from this high that we've got here down to the low here and draw this in so we can see. We're already at the 62% there. I'm just going to try and remove these. And this mouse is just awful. Doesn't work properly. So 62 is where the market's currently trading. Watch the 89 if markets move up and trade to this level. 14165 before you get back to the all-time high, which is this figure here. Just move that over so you can see it. And there we've got the new high of 141, so 14,200. So if you want to draw a line on the 2-minute chart so that you can see where that is just as a reminder. So yesterday morning, the market found support at the low which we spoke about and traded sideways before moving to the upside. And immediately, as soon as the market opened at the close, it was hit, sent the market down, traded sideways, and then eventually it broke back to the upside. But as soon as it closed back through the 200 MA there, once it got back to the close, the double top here that you've got, well, actually it's an 89% fib retracement this is. So if I just draw this in for you, don't extend, so from there down to there, you'll see it's right on the 89 level there. You can see it bang on. So prices then closed back below the 20 bar and then moved sharply lower. So let me just remove this if I can. There we go. And then prices stabilized. They tried to rally back. They came back to the S1, stayed below the 20 bar moving average, but eventually then traded sideways. So it was a bit of activity, but it took most of the morning to actually get going. Wasn't at the desk at this point. I was picking up the new graphics card for the upgrade that's given my arse an headache since last night, but there you go. So in the afternoon, we can see that the market started out all gusto to move to the upside, but immediately it was sold into. And again, if you have a look at the fib retracement drawn from this high to the low, you will see what I mean, because the market opened and then traded again to 78% here, and then this was accompanied by selling, and the market was immediately brought back. And if nobody wants to buy, then what they have to do is shake out to the downside. And again, all the way through here, you can see the buying coming in here and supporting prices, but as soon as we get to the 20 bar moving average, see an increase in volume, and then prices move lower. So then we have to have the shakeout, which you can see here. And once you've got the shakeout out of the way, and this bar is the key because you can see the volume is now lower, the selling's gone, and they bring the market back. We had a buy signal. It took some time before it was actually filled, and then the market trading sideways. And one thing I've noticed for the last couple of afternoons is the DAX has been very, very quiet. So overnight, so let's have a look, see where we are. So prices have moved higher. Let's just compress the chart so we can see the bigger picture. And prices coming off the higher than the DP and the 200 MA immediately on opening. But at the moment, now if we just, well, actually before I do this, we've got the high here. The markets struggled at the previous day's high overnight. So that's key. So keep an eye on this. Also, prices are now below the 200 MA on some increased selling. On the downside, we've got the DP where there should be support if they want the market to move up. And let me just squeeze this up a bit more just so we can see where. So the S1 and the low are together as well. So if we go through the DP, then this would be crucial as well. And on the upside, of course, through the high sharing the R1 as well. So resistance and support in major levels here, and R2 is the upside target there. And if you get to R3, well, generally the market stops for a rest at that point as well. So that's the German DAX. Let's have a quick look at the Dow. Quick look at the daily. You can see that we've put in a new all-time high on the overnight for the Dow. And then finally, a quick look at silver. And you can see that there was some selling around yesterday, and prices managing to hold overnight. So I don't know what Jamie said to Biden, but we'll find out today, no doubt, in the next few days, whether he's allowed to slam the price down again, as he's done for the last 11 years or more. Okay, that will do it for this one. And all things being equal, back to normal tomorrow. But as ever, thanks for watching. See you in the next one.